Sharon, given some of those pressures that Mike was detailing to us on the labor side, on the inflation side, from your view, how resilient are small businesses right now?
Well, we did see a decline in the data for the NFIB report that just was released. However, we still see improvements when you look at the comparison year over year. So small businesses do remain optimistic. We are seeing in our own data that our deposit balances are up year over year. We're seeing demand for loans out there, and we're also seeing payments at record levels within the small business space.
In terms of what needs to happen, though, to bring supply and demand into balance, Sharon, demand is incredibly strong. Is the expectation, do you think, the demand comes down? Or do you think we're going to see some of these bottlenecks, be they labor or materials or whatever it is, starting to ease? Is there an expectation that some of these bottlenecks start to actually fade as we work through the rest of this year?
We do see and anticipate that some of these bottlenecks will begin to fade as the year moves on. We do still see, as you indicated, supply chain issues. Of course, inflation is a big issue. And I think the most relevant and what we hear about so many times, not just this report, but every time we survey our business owners, it's around finding the right labor. And that has just been even a bigger issue throughout this pandemic, getting the right skilled labor to go to work in small businesses across the country. They just can't fill the jobs that they have open.
Well, and do small businesses have more difficulty outsourcing or shifting towards automation, things that maybe larger scale companies could do in the face of labor shortages? Do they have the ability to do that?
They do have the ability, but I would say that it is more difficult in the small business space. You know, when you're competing against global corporations, it is very difficult to really keep up with the investment in technology. And so we have seen our small business owners, in fact, continue to invest in digital capabilities. And especially during the pandemic, those that had digital capabilities and were able to go online and be able to create the goods and services and really distribute those goods and services across the country through digital means, those fared much better. And at Bank of America, 85% of our small business clients are digitally active. And so when you think about the capabilities, the tools, and the resources for small business owners, not just so that they can really protect and grow their business and get through this pandemic to the other side, but also using that as a way to distribute their commerce. We're seeing more and more of that, especially coming out of the pandemic.
Sharon, what's happening with inventories? Clearly, we're seeing shortages everywhere at the moment. Are these small businesses having to dedicate more working capital to inventories to make sure that they can navigate some of the supply shortages that they're seeing? And how significant an increase are we talking about?
Yes, I mean, there's certainly a pressure on inventory. You can just go to order a furniture or a car. You're waiting months and months. So this is an issue for the consumer and for a small business balancing. Do I have the right inventory? Can I meet the demand that's out there? This is what really is that juggling act between the two. Now, we're just coming out of the holidays. And so as we talked about the January data from the NFIB report, we do tend to see a decrease because you've got a lot of demand going on throughout the end of the year in the fourth quarter. And then going into January, you do see a bit of a lull. So, although the NFIB data was a decrease versus December, I don't see it as alarming. I would say it is what we normally tend to see in the trends.
And obviously, when we're talking about inventories and the capital needs, that brings me to a question of where that money is coming from. Are you seeing small businesses being more active in seeking out loans? What does loan growth look like?
We are. And at our company, we are seeing loan demand begin to increase. We have seen pre-pandemic levels when we look at the comparison for our balance sheet for small businesses and what they are doing to access capital. So our clients are coming to us. They are accessing capital. And as you talked about this segment in the beginning, we did hear that there's not an issue so far of business owners. That's not one of their top issues in getting access to capital. And so we are seeing more and more demand that is coming. And I think it has to do with getting more inventory, taking advantage of some of these opportunities that are out there as we come out of the pandemic, and clearly hiring more employees and wage pressures.
Okay, but let's just dwell on that issue of the availability of capital. The availability of the money is certainly there. What's the sensitivity, do you think, to the cost of money? If we see the cost of money starting to go up, and we spent the program talking about 2% yields on a 10-year, clearly there is a rising cost of money right now. Where do you think that starts to have a significant impact on small businesses? When do you think actually they start to maybe reduce their desire for attracting fresh capital into the business? At what point does that come?
Well, we're still at historic lows as far as rates go. So yes, we do see sensitivity to that, but I'm not anticipating any time in the near future that would cause some sort of strain or constraint on access to capital for small businesses. We see that the demand is continuing to grow. We are at historical lows in terms of interest rates, whether you're applying for a small business loan, a mortgage, an auto loan, all of that, really, we are at historical lows.
Well, and Sharon, obviously, when we're thinking about the cost of money, a lot of that is influenced by the monetary side and conditions becoming less easy on that front. We are also experiencing simultaneously a lack of fiscal impulse that we have seen through much of the pandemic. And I'm wondering, especially as so many of these businesses are raising prices, consumers have to be tolerant of those price increases. Are we going to start to see a bit more difficulty on that front?
Well, there are raising prices. When we expected that, when the cost of goods and services are getting to, where inflation is at 40-year, where we're seeing increases in all of that. So I do think that you have to pass that along to the consumer. Small businesses cannot hold on to that. And so we have seen an increase. And then on the flip side of that, it's sort of a tale of two cities, because we do see consumer spending. We just released a report yesterday on consumer spending of our clients at Bank of America is at record high. Payment rates are at record high. We're seeing small businesses continuing to spend. And in fact, that's up 22% year over year. So as you think about the demand of goods and people having money available to spend, our deposit balances are continuing to grow, both in the consumer as well as in the small business segment. And that, again, is up double digits from last year. So all of those point to there's a lot of cash on the sidelines. There's a lot of money to be spent. And we know that consumers fuel small business. So as consumers spend, as we see more goods and services out there, and as supply chains, go abate a bit in this year, we will see the matching of goods and continuing of improvements overall for the economy.